Welcome back to Stocklabs for another market recap. The third quarter has ended, so we're through September into October now, and markets closed the final week a bit choppy. It was, I think we were up on Monday, down big on Tuesday, down again on Wednesday for some of the day, and started to recover. The Nasdaq was picking up into the end of the week, back half of the week, and then Friday market sort of gave back some of the rally it was starting to establish. So overall, kind of a choppy, messy week. Our index performance for the week was Qs were flat at the end of it all. IWM, same, flat. S&P was down 0.7, and the Dow Jones was down 1.4%. Bond market still is really struggling, down 3% for the week. We had new highs print in bond yields kind of across the board. Maybe not the 2-year, but 10s, 30s. A lot of the long end was really pressing higher, during the week. So seems like rate hikes or rate cuts for next year are being priced out of the market. Sort of a higher for longer regime is markets starting to take it more seriously. And it's caused some volatility to come into the equity market that wasn't really it wasn't really expecting that for the last couple months. It was kind of a given that the Fed was going to start cutting next year, and that was just going to be that, but that might not be on the table as much anymore. So if we look at our leadership stocks for the week, NVIDIA, top performer, plus 4.5%. Tesla, up 2. Google, flattish, up 0.5%. Meta, up 0.3, 0.4. That was it. Rest were red. Microsoft red. Netflix red, slightly. Amazon down 1.5%. Apple down 2%. Apple has come off, the last few weeks. I think off the highs, it's probably, I don't know, might be 10% off the highs or something like that, from earlier in the year. And so sort of a mixed bag here, but some are moving higher, some are moving lower. They kind of swap places around. Google, I think, has been the steadiest, over the course of if you're looking at the year as a whole. So yeah, that's basically that. And for our industries, we look at breadth for the market. Kind of right along this unchanged line. There's not a lot here to look at. Utilities stuck out to the downside. They got smoked. This complex has a really hard time with higher rates. Essentially, why are you going to buy a utility stock, that pays 4, 5, 6% dividend maybe, when you can buy 10-year treasury that, will also pay you, 5% or something almost. So, there's in this sector, there's competition from government bonds for sure. Rest, like I said, more or less flat. There's nothing to really point out here. As far as subsectors, we don't really have a whole lot that's like breaking out to the upside or anything like that. You have a couple isolated ones up 5%, but nothing spectacular. You see some of these semiconductor sectors are lurking, sort of. I mean, they're only up like 2-3% for the week, but they're near the top of the table here, so that's slightly encouraging. Downside, drugstores down, gold down, precious metals have been under just immense pressure. I mean, the dollar has been on a warpath. Bond yields have been on a warpath. There's really no case for precious metals. stocks or the commodity under those sorts of circumstances. So we'll see. I mean, these tend to snap back pretty hard when they do, but for now, I don't see what the attraction is. But yeah, there's also not a whole lot that's down over 5% here. So I mean, I would call the breadth very slightly weak, although I'm not going to draw too much of a conclusion just because everything was kind of more or less mixed and in line with a choppy, representative of a choppy week is what I would say. So if we look at breadth by market cap, we've got the 1 to 5 billion cap stocks up 9 basis points. 5 to 10 billion up 46 basis points. That's not too bad. 10 to 50 billion only up 3 basis points, flattish basically. 50 to 100 billion down 30 or down 87 basis points, and 100 billion cap plus companies down 79 basis points. So, the bottom of the cap range was okay-ish, more or less flat to up. The larger cap stuff was weaker, definitely, -8/10, -9/10, that sort of range. I mean, that's more or less, that's a little bit worse than the S&P, definitely worse than the Qs. So net, there was a slight skew to the sell side this past week. And if we look at the coming week, what intelligence has for us, got short natural gas, got bull gold miners. Oh, okay, so I mentioned that those tend to snap back pretty well. Stocklabs actually is looking for somewhat of a snapback in that group. We've got the FANG stocks bullish. We've got transportation bullish, technology bullish, South Korea bullish, tech bullish. Okay, short treasuries. And China's bullish, semiconductors bullish. So, I mean, this is painting a pretty rosy picture. Let me just take a look at the inverse of this screen to see if the downside sort of looks the same. So oil is bearish. That's natural gas. Gold miners up. Gold miners is bearish. Okay. HIBS high beta short is bearish. So this tends to correlate with the IWM. So we got VIX bearish, semiconductor bear is bearish, so bullish. Another bearish VIX. I didn't even know there was an autonomous vehicle, electric vehicle ETF, but that is bearish this week. And we've got uranium miners bearish, ignore. Emerging markets, total income, ignore. Short Russell is bearish, so bullish Russell. I would say based on everything, you're going to see a bullish week to start October. Like I mentioned before, we got some sort of what I would consider some major oversold readings on the market. Sort of the second to last week of September, the tail end of September here. We're coming off of that. As far as the oscillator goes, the signal is still active, meaning the market is still under this condition. So we want to see sort of more of a relief rally than what we've gotten so far. I mean, market is off the absolute lows from September, but we want to see it sort of find some stability higher. So last week was very choppy. That could have to do with quarter end, could have to do with the government shutdown stuff that was looming over the market. And up until Friday, it looked like shutdown was going to happen. Deal came in on Saturday night. And so there will be no shutdown for at least 45 days. And so start of the fourth quarter, I think you're going to see some buying. Maybe it'll still be choppy, but whereas this week was choppy and mildly to the downside, I think you're going to see choppy and moves to the upside this week. And from there, we'll see if bulls want to extend it a little bit. Overall, I'm not sure. The market is a little bit iffy, I think, at least through probably October. Although, let me see. Seasonality wise, October tends to be okay. Actually, it's one of the better months. So, yeah, I mean, let's just call it, we're going to be bullish this week. So I'll be looking for, dips to buy. And from there, you can kind of manage the risk how you want. But I don't think you have to be too, too worried about these end of month flows, end of quarter flows anymore. It's everything sort of starts over. So new month, new quarter, and we'll go from here. So thanks for tuning in. Check back next week, and good luck out there. Bye.